Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. This segment is presented by Charles Schwab. I'm your host, Jill Malandrino, and joining us this afternoon, we have Alex Coffey, Senior Trading and Derivatives Strategist at Charles Schwab, as well as Brian Joyce, Managing Director on the Nasdaq Market Intelligence Desk. We're here to discuss the sustainability of the market's run from the April lows and if a period of consolidation could be on the horizon. It is great to see the both of you. As always, welcome back to Trade Talks. Alex, that really is the question that we're trying to answer here. Economic data continues to plug along. Earnings were quite good. The market continues or was continuing to hit new highs. What are your thoughts where we are right now?
Yeah, hard to disagree with anything that you said. Always good to be here, so thanks for having me, Jill. But one thing that did come out of the earnings season is that earnings estimates were starting to be adjusted lower based off guidance from many companies. And also, when you look at forward valuations, you're starting to see them getting elevated versus where they've been historically. SPX 25 times thereabouts, NDX 30 plus times thereabouts. And so when you look at the data, as you mentioned, has been better than expected largely, but it's come off year-to-date highs when you look at something like the City Economic Surprise. So all that to be said, you got a market that's priced for a lot of good news, and that good news is getting incrementally less good. And so probably a market seasonality-wise due for a little bit of consolidation, if not a little bit of a pullback.
Yeah, and Brian, that's something we were discussing on the desk before, where typically you'll see some volatility or a pullback in September. We have not seen any of that. In fact, we continue to hit new highs just about daily. In terms of what you're seeing on the charts, not that it's necessarily a sell-off is being expected, but any consolidation that could come into play here.
Yes, and Jill, thanks for having me on the show. So we know the breadth is good. We have, one way to confirm that is just in this week alone, the Russell 2000 has made new highs, and first new all-time highs. And so that just confirms to me that breadth is doing quite well. It maybe not as robust as we saw in the early stages of this uptrend, but I think it's looking well. There's two groups within the small caps, I'd say, that has just outperformed remarkably. The Russell 2000 material sector was up almost 70% off of its lows, and well into overboard territory there. You can see that breakout from a multi-year resistance level, just like a straight wall higher. And then small cap industrials as well, which you can see here on this weekly period. Both of those patterns for this week look like maybe they could be showing some signs of exhaustion. And so I wouldn't be surprised based on those two industries which have been the leaders, along with the broader index, just retesting that prior high, maybe the space is due just for some temporary consolidation.
Yeah, it would be welcome, certainly if you're looking for more attractive entry points to get into some of these names. Alex, when you take a look at it from the volatility perspective, anything we can glean from there, whether it's more near term or if you're looking out towards the curve?
Well, and I'll combine this with the Russell conversation and the rotation conversation. If you look at the S&P and the Nasdaq, now I should have put the Russell on here, but I left it off. If you start to see some of that rotation, what you may actually see is that money is coming out of the NVIDIAs, the Metas, and those type of names, but it's not all finding its way back into an NDX or an SPX component. And you might actually see a little bit of weakness, or at least of a drag on those major indices at the, of course, benefit of the Russell 2000. What that might do, and we've seen this in recent trading sessions, is you start to see the component or constituent volatility start to increase. So you'll have more days where maybe 250 of the S&P 500, 45 of the Nasdaq 100 are higher or lower on a given day. And they're decent sized moves, 2, 3, 4% in some cases, kind of across the board. But it's almost like this tug of war where the index level doesn't really reflect it. And so we've seen a lot of low volatility on the index level, but you're starting to see volatilities pick up on the constituent level or the individual stock. And so that lower study of the S&P 500 Nasdaq chart I had is a relationship between VIX and sort of the VIX of the average constituent of the S&P 500 on a cap-weighted basis. And that ratio is getting closer to 2.2, which does illustrate and indicate in one capacity a little bit of an overbought market and one that's starting to see a little bit more volatility bubbling under the surface. If you look at volatility on a headline basis throughout time, which is this VIX curve that we have here on the screen, basically just looked at the quarterly expirations from December, March, and June, or those last three plots versus the current future, which is the VIX in October. And what you're seeing is there's something like a 20% premium going out to June of next year versus the October future now. And that's not totally uncommon, but it does reflect that there's still uncertainty. It's just priced out into the future. It's not priced out for today because day to day, things have been relatively quiet.
Yeah, they have been. Brian, you had noted that there's a space which could indicate some concern. BDCs, which are essentially non-bank lenders, they do have exposure to interest rates, and they have been under pressure. Give us some detail in terms of what they are, why they've been under pressure, and why it could indicate potentially some stress within the market.
Sure, and I don't want to sound like I'm sounding any sort of alarm bells for
Right.
the broader market or the economy, but we have seen in mid-July the BDC indexed there's an ETF, an index fund, BIZD, Business Development Companies, what BDC stands for. They're lenders to small private companies, and we have seen this index down double digits from its July high, which was retesting the high from earlier this year. So from a technical level, it wasn't it's now initially surprising. It's not surprising to see initial pullback from there, but we have been seeing this breaking down. It's back below its 200-day moving average. It's been trending lower since last week's FOMC meeting, which you would think lower rates would be net positive for the space. So that's just something that's I think on the radar. I wouldn't yet call it a canary in the coal mine for the broader market here, but something that's on my screen. That said, and Adam was talking about the rotation of the market. When I look at if we are going to see movement amongst different sectors or corrective price action, what has been this year underperforming, and even last year the energy sector, we are seeing this week, last 5 days, up 2.5%. It's beginning to break out of a 3-4 month range right here. So this is one of the more optimistic groups in the near term on my charts. And then regional banks, which a lot of them are in that small cap space, and they have been underperforming versus say the large cap banks, which have more exposure to capital market revenues. And so this KRX index right here, it has been making a trend of higher lows and higher highs, yet it still remains more than 11% below its 52-week highs, which were reached back in November. So I think this space has potential maybe for some upside as well.
Yeah. And Alex, if you take a look at the aggregate of Schwab traders, you had mentioned before that you're seeing some diversion going to other names than you would expect with the typical large cap. Are there any sectors or areas of the market that you've seen or you could discern where that gravitation is going to?
One of the things I think's been interesting, Jill, if you look at recent, activity, whether it's through the stacks or even behavioral, I guess answers when they're polled on, kind of how they're feeling, is there is a feeling that they're in control and confident in what they're doing. There are names that they trust. NVIDIA is certainly one of those. Palantir has been a name that's been trusted by retail investors at Schwab over the last year. But you're starting to see names like Apple find their way into the most sold names. You're starting to see rotation out of some of those names when opportunities present themselves. So the generals, I guess I could say, are changing as Apple has sort of held that mantle for several years. It's certainly NVIDIA now.
All right. Appreciate both of your insights as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.